All right, everyone, welcome back to another episode of Everything Business. Right, thank you for tuning in. We're going to do a video real quick. Today, we are going to be looking at double entry. Right, I have been getting a lot of requests about double entry, and so we're going to look at how to do a double entry account. All right, so we're going to do this double entry account, and I hope that you will get a better understanding of how to do double entry from this video. All right. So let's go over some key concepts about double entry. So we know that double entry is really how we record the financial transactions, right? And the reason why it is called double is because one transaction has to be recorded more than one time or two times, right? Yeah, so you want to record the transaction two times, right? And this is basically just for safekeeping and also to ensure that your transactions have a type of cross-reference, right? So that you can always be sure that you are not making any errors. And so the double entry system is important. Um, when we're doing a double entry system, we have to remember, right, that whatever items are increasing, we debit, except for the capital account, and whatever items are decreasing, we credit, except for the capital account, right? Now, also, an important point to remember, right, is that as it relates to assets and expenses, right, for assets and expenses accounts, in order to increase them, you make a debit entry, and in order to decrease them, you make a credit entry. For capital and liabilities and revenue accounts, right, it is the opposite. So in order to increase them, you make a credit entry, and in order to decrease them, you make a debit entry. But enough talk about that. Let us practice and let's see what we can get done. If you have any questions, just put the questions in the comment section. All right, let's get right into this. So the first transaction says that on June 1, we started business with cash, right? So right off the bat, you have to ask yourself, what two accounts are we going to use, or what two accounts um, is affected by this transaction, right? So watch this. He said started business. So once we know that we are investing money in the business, we know that that is capital, right? So started business is important for you to identify that. And it says with what? With cash. So these are the two things that stand out from this transaction, right? If we are starting business, that we know that that is capital. And the capital account is always what? Always credited. So we can go ahead and write in our capital account, right? So this is our capital account. It is always credited. So what that means is that we are going to be putting the information on the credit side. So this is the credit side of the capital account, right? The right-hand side is the credit side, and the left-hand side is the debit side. So we start by entering the date. So we can enter the date. You can enter the year 2018, right? So you go June 1, and it says you started business with 3,500 cash. So what we're going to do is we're going to write the name of the other account that is affected by the transaction, which is cash. So you write cash there, right? And you write the amount. So the amount here is what? $3,500. So you can write the amount 3,500. Well, let me put in my dollar sign. All right. I always tell my students to put in the dollar sign. So 3,500. Right? Now, one thing about the double entry system is that for every credit entry, there must be a debit entry, and for every debit entry, there must be a credit entry. So the next account that we're going to need is our cash account, right? And the cash account in this case is receiving because you're putting in money in the business. So we write it June 1. And where is the money coming from? Capital, right? The name of the other account that is affected. So you want to ensure that you write that in. All right. And it is the same amount of money, 3,500. All right, so that's our first transaction, done and dusted. Easy one, too. All right, let's look at June 2. It says, put 2,800 of cash into a bank account. Again, you need to ask yourself, what two accounts do I need to open, right? So you look into the transaction. The transaction will give you clues. So we right off the bat, we see cash, yes, cash, and we see bank, right? So we know that the two accounts that we would need are cash and bank. The next question you need to ask yourself, which account is receiving, which account is paying? It says that you are putting 2,800 of the cash into the bank. So it sounds to me like the bank is receiving, right? And if the bank is receiving, then it means that the bank account must be debited. And if the bank is receiving, it means that the cash must be paying out. Not true? All right, very good. So we go again. So 2018, I will drop in our dollar sign. You realize that I did not skip any line, right? So I just continue. So June 2, and you enter the name of the other account that is affected by the transaction. And in this case, it is bank. So it is 2,800, right? So we need to have now a bank account. So this is my bank account. And the bank account is receiving. Not true? All right. So if the bank account is receiving, then we're going to debit it, right? So it's June 2 cash, which is the name of the other account that is affected. And the amount of money is what? 2,800. And that is the second transaction recorded, done and dusted. June 3, bought goods for cash, right? Now, when you look at this transaction, again, you ask yourself the same question, right? What are the two accounts that I need, right? You know what? The clue will come from bought goods. When you're buying goods, we call it what? Purchases, not true? Yeah, right. So we're going to have the purchases account. They can't have any bought goods account. And then the other account that you have is cash, right? So we already have a cash account, so we don't need to draw it up, but we don't have a purchases account, right? And I tell you something about the purchases account. Purchases account is always debited. If you remember that, you're good, right? Half of your problem is already solved. Purchases account is always debited. Don't forget that. All right, so June 3, right? The name of the other account that is affected by the transaction, which is cash, and they put in $150, right? So we go over to our cash account, which we have there already. And if the purchases account is debited, then it means that the cash account is going to be credited. Very good, right? So that date is what, June 3? And the name of the other account that is affected is purchases, right? And they put the amount of money there, which is $150, just like that, right? Next transaction, June 4, bought goods again, all right? So once you see bought goods, you know that we're talking about what? Purchases. That is the clue, right? On credit, right? Now, this is important, on credit. Anytime you're buying goods on credit, you're not going to have a credit account. So that's not the clue. The credit here is not the clue, right? When you're buying goods on credit, you use the name of the creditors, and that is the reason why they give you the information. So all of this information is the clue for the next account, right? But if you realize they are buying from multiple persons on the same day, all you need to do, this is simple, just treat it like one transaction, right? Treat it like you're buying goods on credit from El Coke. That is one. The next transaction is you're buying goods on credit from M. Burton. That's another transaction, all right? And you should be fine. So the purchases account must always be debited, and then now we have to credit all of these guys' accounts. All right, so let's get right at it. All right, so we have completed entering all of these creditors' information into their accounts, right? Yeah, and so that is how we record that transaction. All right, the next transaction is June 5, bought machinery. Another tip, when you're doing double entry, whatever it is that you're buying must be debited, right? Though this is a fixed asset. Machinery is a fixed asset. So we are buying machinery, so that must be debited. So that is the clue on credit, right? And remember, anytime you're buying anything or selling anything on credit, you record the name of the creditors, right? Yeah, so there it is. Right. So we're going to need his account, Subaran account. So we go to machinery. We don't have any machinery account as yet. So we have to drop the machinery account. So machinery account. Machinery account is a fixed asset account. And to increase a fixed asset account, we make a debit entry. So always remember that. All right. Whatever you're buying is debited again. That's another tip you can use. So June 5, right? And you are going to put the name of the other account that is affected by the transaction. So Subaran Limited. And then the amount for Subaran Limited is what? $170? Right, $170. Right? So we have to now create an account for Subaran Limited. And he's a creditor, or they are creditors. So we will have to just credit their account. So June 5, machinery, which is the name of the other account that is affected, and it is 170. I will finish with that one now. Now look at June 6. June 6 is another one like June 4, right? You are selling goods on credit. The idea or the clue coming from sold goods. When you see sold goods, you know we're talking about sales, and you're selling goods on credit, right? These are what you would call now your debtors, and the reason why you would call them your debtors is because they owe you money, right? So just like with the creditors, you don't write credit account, you write the name of the creditors. In this one, likewise, you don't write any credit account, you write the name of the debtors. All right. So you're selling goods on credit. Another thing too about the sales, right? The sales account is always credited. All right. So I'm going to show you how we record this transaction. Let's go. All right. So it says paid rent by check. Next transaction, paid rent by check. The two accounts that we would need here is rent and bank. You wouldn't have check. Anytime you see the word check in accounts, you know we're talking about bank, right? We do not have a bank account, so we have to make one. Well, yeah, we do have one. So if you look back up, we have a bank account, right? So you ask yourself, what is receiving? The bank account is receiving, right? So you go June 8, rent. Is the bank account receiving though? No, the bank account is not receiving, right? Wonder if you guys were paying attention, right? You are using money from the bank account, right? So you are paying from the bank account. So the bank account is actually paying out money, right? So June 8, you're paying. So that's rent. Rent is an expense account. And a tip that you must always remember is that expenses account always carry a debit balance. So you're going to always debit your expenses. All right? So always remember that. So rent, insurance, drawings, all of those things, they are expenses. You always debit them. All right? So you're going to debit your rent account. And it is June 8. The money is coming from the bank account. So you put bank there. And the amount is 55. Good. So now we move on to the next one, bought fixtures. Now this one is similar to June 5. So bought fixtures Fixtures is a fixed asset, and you're buying it on credit. So you write the name of the creditor, right? Matalan Limited. Those are the two accounts. We don't have a fixtures account, so we write it up. Fixtures. Whatever you're buying must be debited. Always remember that. So it is June 10. And you're buying from who? Matalan Limited. And the amount is $480. So we have to now draw up an account for Matalan. And we credit their information. June 10 fixtures, and it is $480. All right. Next transaction, paid staff in cash, right? Two accounts that you will need, staff, or you can say wages, right? And cash. So wages is an expense, right? So you know that we're going to debit that. That means that we're going to credit the cash account. So let's write our wages here. So this is our wages account. And we're going to debit it. So write in our date. And that is June 11 cash. And the amount is $120. So we have to now go back to our cash account, because we have our cash account at the top, right? Are we going to credit our cash account? June 11, and you put the wages there. $120. Right, just like that. So for every debit entry, you have a credit entry. So see, we credit the cash account right there. Next transaction, return goods to M. Burton and T. Hill. Return goods to. The important thing for you to see there is to. So that is what we call returns outwards, or we call it purchases returns, right? So you can see their name in the purchases account there. So we need the return outwards account, and we need the name of these two creditors. We're going to use their account, right? Another tip, purchases returns account is always credited, right? Always credited. So we have M. Burton, and because they are receiving goods, right, we are going to debit these guys' accounts. They are receiving goods, so we're going to debit their account. So June 14, you can write purchases returns account, and it is $40, right? And then T. Hill, same thing would apply. June 14, purchases returns, and the amount is $60. So we have to now go and create a purchases returns account, because we don't have one as yet, right? So this is our purchases returns account. And we're going to credit it with the information now. So June 14, right? I have to put the name of the creditors now. So M. Burton, and that is what, $40. And June 14, T. Hill, and that is $60. And finally, it says bought motor van by check. Motor van is another fixed asset. So that is the clue, that is the account that we need. And once you see by check, you know that we're talking about bank. Whatever you're buying must be debited. And we don't have a motor van account as yet, so we have to create one, and we're going to debit it. All right, so motor van account, right? And we're going to debit it. So that's June 15. And the money is coming from bank, $700. So we have to go back up now to our bank account. Let's see where our bank account is. Way up the top up here. You have to look for our bank account, you know. And we are spending money from the bank, right, to buy this motor van. So we have to credit the bank account. And also, you can look at it another way, that the motor van account has just been debited. So now it means that you have to credit the bank account. So you credit the bank account with the $700, right? And there you go. Join me in my next video where I'm going to teach you how to balance off all of these accounts. All right? See you in the next one. Remember to like, subscribe, and share. Well, good. See you in the next video.